Are you thinking about selling mortgage protection life insurance? If so, you found the right video. What I'm going to be doing today is giving you an overview of how selling insurance in the mortgage protection business works. So if you're looking to get started in a career, then this is the video for you to watch. So let's get started. Greetings and salutations. It's David Duford, owner of Duford Insurance Group, where I train and recruit agents nationally to sell things like final expense and Medicare, both face-to-face and over the phone. Thanks for watching. So today I'm going to be talking about having a career selling mortgage protection insurance and what that career is actually like. This is a good primer video, if you will, to give you a good overview of what mortgage protection insurance is completely like. So let's begin. So what exactly is mortgage protection insurance? Well, mortgage protection insurance is a marketing term to describe what's called non-medical term life insurance. So let's actually look at what non-medical term life insurance is. So first of all, term life insurance is what we call temporary insurance. It's term insurance that lasts for 10, 20, 25, sometimes 30 years. And then after that period of time has lapsed, the policy either goes up extremely high in price or just cancels out altogether. Term insurance is the most popular form of life insurance that's out there. It's a way to get cheap life insurance and a lot of life insurance. And it's designed really to cover what we call temporary obligations. For example, a mortgage is temporary. The idea behind having a mortgage is to eventually pay it off. And people buy term insurance to cover temporary obligations like that. More on how mortgage protection benefits in a minute. For most term insurance products, the premiums remain level. They don't ever go up in price until the end of the term if they don't flat out cancel. And when we say non-medical term, what non-medical means is there's no medical examination in order to qualify. The company simply pulls up your health history, your prescription history, also your driving record and other kind of information, sometimes your credit report with some companies, to determine the insurability of the prospect. With some companies, this is an instantaneous process. There's more and more non-med term that gives an instant decision. With some companies, it may take a couple of days to a couple of weeks. But more often than not, the term insurance products you'd use for mortgage protection are going to give a fast, quick decision, hopefully while you're in the home talking to the prospect. So how is mortgage protection life insurance sold? Mortgage protection life insurance is predominantly sold face-to-face, albeit with COVID in 2020 and beyond, has pushed more agents to sell virtually using Zoom and sometimes just exclusively over the phone. It's a one-call close business where you sit down with the prospect, talk to them about what they want to accomplish, and then show them how mortgage protection can actually solve the problem for that particular client. Let's talk about the market opportunity here. So why is mortgage protection something that is a good opportunity? Well, first of all, mortgages itself is an obligation, right? It's a debt. And the thing you'll find in the insurance business, people are motivated to buy life insurance of some sort when they know and are aware they have an obligation. And the thing with a mortgage is once you buy a home, you really don't buy the home. You assume a loan for many cases, hundreds of thousands of dollars. You're immediately in debt. And if you die and your income as a household changes, you may lose the house to foreclosure because you can't pay it. So what a mortgage protection policy does is that upon the death of the insured, it pays the death claim to the beneficiary, typically a spouse or a kid, of which to pay off the house to keep it free and clear so that the family isn't evicted or foreclosed on and they can keep their home that they worked so hard to have. So that's the appeal to a mortgage. And what the target market for mortgage protection insurance, of course, is new home owners, people who just bought a home, and in some cases who have refinanced recently. And the beauty of mortgage protection is you're using a really qualified lead. People who just bought a home are more likely than not open-minded to protecting against what happens if they die. What happens if they could potentially lose their home because of a spouse passing away. So we send out these cards to the prospects right as they close in their homes. They get them usually a week or two later. And then people get these prospecting cards and they either call a number for information or they mail the card back. And then somebody calls and sets an appointment with them to go see them. So that's the great opportunity. And it's also something I think kind of as a side note to understand about mortgage protection. And this may be a downside we'll get into a little bit later, is that mortgage protection is highly tied to the success and health of the economy, specifically the home market. Right now at the recording of this in 2021, home buying is hot in a lot of markets. Prices are going up. and that means more people are buying homes. And when more people are buying homes, there's more leads for mortgage protection. And again, more people are more inclined to have insurance. So it gives you more leads to see and more people to talk to. As far as licensing for mortgage protection, all you need is a life insurance license. You don't need any other kind of license, no health insurance license or anything like that. So if you're not licensed yet, just get the life insurance license and you'll be ready to sell mortgage protection. So what is the income earning opportunity of selling mortgage protection? It depends, of course, on how many prospects that you take or how many leads that you see. But the mortgage protection business is of ample opportunity. I think if you're a full-time mortgage protection agent, by the second full year in the business, you should be doing a six-figure net income. There are agents who earn a lot of money with mortgage protection. The one nice thing about mortgage protection is as you start to advance as an agent, you can start selling other products besides mortgage protection insurance to mortgage protection leads. You can also sell things like index universal life insurance or possibly annuities. And these sales opportunities give you more opportunity to increase your income, increase your sales per household, and do a better job for your clients. So what are the drawbacks to selling mortgage protection insurance and having a career mortgage protection insurance? Well, the biggest drawback in my mind is that it's completely tied to the health or the sickness of the economy. Let me give you a little story to demonstrate what I mean. I started selling final expense insurance in 2011. And if you're around back then and aware of how the economy was, it was pretty bad. Main Street was suffering. Not a lot of businesses were doing great. And the housing market was pretty bad too. There was a big housing collapse with the mortgage-backed security crisis that we went through a couple years prior. And what I realized getting into this business is that mortgage protection just wasn't around. It was talked about historically as being a good opportunity with the housing market in the early aughts doing well. But it kind of was just out of vogue. Nobody was really doing mortgage protection like they used to. Because quite frankly, at that moment in time, there just wasn't a lot of housing that was being for sale. And when you don't have a lot of houses for sale, and there's not a lot of purchases going on, that reduces the capacity for leads. Because remember what I said earlier, when you do mortgage protection insurance, you're working new leads from people who just bought a home. And when you're in that position, what happens is that if there's not a lot of leads, you don't have a lot of opportunity. And if the agent pool stays the same, there's less opportunity for agents and more competition. So the problem with mortgage protection, as I see it, if you feel like the economy is going to be bad, or maybe you're in the middle of a bad economy and the housing market's not doing great, I don't think mortgage protection is nearly as a lucrative opportunity as when things are really thriving. The other aspect of mortgage protection that you have to consider, even if the economy is thriving, is using a direct mail lead system like most agents do. In order to stay full-time in the mortgage protection, you've got to work multiple cities. For example, just for the heck of it, a couple of years ago, I was looking at what it would take for me to sell mortgage protection full-time to get about 20 leads a week. I live in a city called Chattanooga in Tennessee. You all may have heard of it. And I was wondering, well, how many leads could I get out of Chattanooga? And it looked like the odds would put me at about 3 to 4 leads a week, which is crazy, right? Chattanooga is a medium-sized city, and all I can get is 4 leads. And so I expanded out the opportunity, and I found I would have to cover a 2.5, 3 hour drive radius between Nashville, Knoxville, north of Atlanta, and Birmingham, or maybe it was Huntsville, in order to stay busy full-time basis. But if you actually started to piece things together, that means I would be on the road for hours and hours a day in different cities across 3 states, and they have to stay overnight some days because of the distance I'd have to travel just for a few appointments. And when you couple that together with the fact that mortgage protection is an evening off work type of sales process, you're going to be gone a lot of nights. You're not going to be around your family. Most agents who run a lot of appointments start around 2 or 3 o'clock in the afternoon and work all the way up to 9 or 10, 3, 4, maybe even 5 days a week. And if you're a young man or woman, you've got kids and you've got other obligations, it's going to be really hard on the family to run a mortgage protection style business. So these are the things that I see as the biggest roadblocks, albeit a great business opportunity. It's something that doesn't mesh well with a lot of people's lifestyles and what their other goals are. So some advice on finding a good mortgage protection insurance agency to join. Make sure that the agency you're thinking about joining is focused on production and not mass recruiting. Again, one of the biggest problems with mortgage protection is there's a big multi-level marketing culture where they teach you to recruit, and it's just as important as selling. I don't agree with that, of course. I think you should focus on selling, becoming good at the craft of selling mortgage protection before you even bother about recruiting. So make sure that you find an organization focused on training you to be a top producer. So I hope you enjoyed this informative video on what it's like to sell mortgage protection insurance and have a career selling mortgage protection insurance. If you'd like to leave a comment, please leave them below. If you want to subscribe or thumbs this video up, feel free to. Would love to have you around and look at more of my content that I produce daily. And if you're interested in looking at, say, final expense or Medicare, these are other opportunities I think that may offer advantages if you don't like some of the drawbacks to mortgage protection mentioned earlier. Then check out the links above and below. It'll take you to an FAQ page that will tell you how my organization works, give you some good insight on what the final expense in Medicare business is like so you can compare and contrast it to mortgage protection, and just give you a kind of another way to look at this business as far as another opportunity. So I hope you enjoyed this video. And again, subscribe and like if you haven't already. And we'll see you next time. Thanks for watching. Bye.